Okay. I just started streaming. If you're able to chat, tell her tell her I started the stream. Yeah. I thought I know I used to have it set up, but fair enough. Yeah, I'm good on the fly. Watch out. My tech skills are strong. They're not really. That's a lie. I'm lying. Okay. NASDAQ. Yeah, we're at the edge. Coming into this, we are a 0.75. So the question is and was, did small caps do enough to did small caps do enough to kick us into a 1? Has anybody scored theirs? Stephen D, I think, did. Stephen D, did you go to a 1? I'm so curious. Super, super curious. Okay, let me see. Oh, you've been a 1 for 2 weeks. Psh, you're ahead of the curve, apparently. Let's drop down. So everything looks great here. We know that the Russell's been lagging from this long term. Although it's very interesting. I think it's this little drop here that it had in this January to March time that threw it off, because when we go to 133, it still includes everybody dropping, but you can see it's got this in a secondary leading position. And it's been there now. I agree, it's been there for a little while. I'm just so reluctant to go to a 1. You guys know that. That's just kind of my MO. But we're there now for almost a month. Then we drop down to 66 days. And it's been leading for almost a month. I'm going to go. I agree. Small caps have moved in. They're volatile, but still steady. They're still steady. I'm going to give it the 1. First thing I score, bam, it's there. The hallowed 1. That's pretty good. That might be enough to keep us at 525. I'm pretty sure I'm dropping my VIX score. Just saying. Yeah, let me see here. Oh man, my computer is humming right now. It's like it's struggling. I don't know what's going on. It's louder than normal. I'm pretty sure I need a new desktop. And I was trying to wait to give it to myself for Christmas from Santa Claus. Oh, that's not what I wanted. But I don't think I'm going to make it. I think I'm going to have to bite the bullet. Okay, let's see here. All right. Yeah, the cooling fan is running, but I'll tell you, I feel like it kicks on and stays on. I don't know, like the machine's just running hotter than normal lately. I don't know. Is that a thing? If you're a computer guy, let me know. Okay, so major market got to a 1. Now, here's the other thing. And I actually didn't think about this. I probably should have made this range 5.5. I can't change it after the fact, but we might. If sector rotation, they make noise when they're ready to die. There you go. That's what I think is happening here. You okay down there, buddy? It's cooling off now. Okay. Hard drives. Now, does it matter? I have a what is it? A solid state hard drive? Is that better or worse? Multiple web pages can cause the fans to ramp. Oh, better. Okay, better, but yeah, multiple. If you talk about multiple web pages, I mean, I'm full of web pages. Full of web pages. All right, let's go. Let's keep going. Press is here. He's in his mind thinking, just go to the 22 days for the love of all that is holy. There it is. Still confirming. Still giving us the Russell just taking charge. People like small caps. What does that mean? It means the appetite for risk is up. Appetite for risk means people are looking to put money in. Whatever else we see, and you're starting to see a lot of people like, oh, this is overblown, that's overblown. Okay, so I'm gonna remind you. It was the only one that was down. That's a good point, John. You can see that right here. But when we look at the overall relative strength, still holding up. On December the 5th, 1997, that was my birthday. Still is, but that's why I remember it so well. I actually wasn't trading yet. I was still in college, finishing up, having a good time. But on that day, the OG Fed gangster, Alan Greenspan, came out in a speech, and he coined the phrase, you've probably heard this, irrational exuberance. And he was describing the .com market. December 5th, 1997. What does that mean? Well, if he's like, oh, this is irrational exuberance, this thing's going to crash, and he decided he's going to short it, he would have blown up, because it kept going up in 98, kept going up in 99, and it still kept going up the first few months of 2000. And then reality struck, and it definitely, right? NASDAQ lost 80% of its value. So what's the point of irrational exuberance? The market can stay irrational longer than you can stay solvent. That's the corollary follow-up. We can't just be, remember, it doesn't have to make sense. And so can we still just keep on pushing? Yes, can, likely will. That's how I see it right now. Everything's looking pretty okay. My first lesson in trading, Preset. One we've all experienced, I would have to imagine. Hey, Vladimir, good to see you. Okay, so that looked great. Let's go here. Let's look at the same thing. Whoops, that's not what I wanted. I don't want you. I want you here. Who's leading? Comm Services. Yeah, we know it must someday. The question is when, and can you last long enough for that to happen? Technology Communication Services are the two core leaders from the long term. Then when we look at what's next, we have a basket of growth stocks or growth sectors plus utilities. So we have financials, we have industrials, and we have discretionary, just kind of sitting below. They're still positive, not ahead of the market, but they're okay. And all our defensives down here, except for utilities, which is more of a hybrid at this point. Okay, let's move to 133. Technology, the carrying like we know it can. Comm Services is there. Discretionary is there. However, I need a fourth. If I don't have 4 by when I get to the scoring, I'm not going to give it. I need 4 to get to a 0.75, and I need all growth sectors in leading positions in order to take it to the full 1. It does not get there lightly. You guys know that. This looks good. Very good. I've got 3 of 5, and then I've got the other 2 just sort of hanging out nearby, right? Then we have utilities. Then we have everybody else down below. Let's go to 66. So when it comes to institutions and how they're aligning, and are they starting to look or feel or posture in any way defensively, based on what we see from major market and sector rotation, the answer is no. Now, could there always be just a fast disruption? Of course. And we watch for that on our, especially when we look at the VIX and we look at, like, is there a hedge? Is there something there? Not yet. Let's go 66. What do we have? Oh, we've got 3 solid up here. We've got communication services, we've got discretionary, and we've got technology. That's where most of our trades have been coming, you'll notice, obviously. Because that makes sense. Where's the money flow? That's where we want to trade. Less so in financials and industrials. We don't have enough to raise the score. I'm staying at a 0.5. But looks quite favorable. I mean, a 0.5 is not like, oh, it's only a 0.5. 0.5 is quite good. That's a good score. Let's see if anything feels like it's coming when we look at the 22. Energy. Discretion is near the top, press. Bam, look at them. Bingo, bango, looking strong. Good news indeed. 100% agreed. And here you can see the same 3 just right at the top doing their thing. Comm services, technology surging, discretionary's there. Energy's dropping out. We're hoping financials can make the jump, or we're hoping industrials can make the jump. Give us that 4th sector. Give us that strength of growth sectors in a position. Until then, there you go. Don, for some reason, my phone just popped up and it said, I saw Don post that his birthday is December 4th. So in December, there's going to be a little party right around the 4th and the 5th. It's going to be amazing. You don't want to miss it. Okay. Let's get back to business. So pretty good. Let's get back up here. Let's open up the long term. I mean, it's close, but it's still not quite there. But if we have 2 more weeks like we've had and we get to the top of this red line, I'm going to raise mine. I said, if it gets to the top of the red without pulling back, I'm going to give my long-term score a better, I'm going to raise it up. If that happens. Okay, let's wait and see. Let's wait and see. Look at the major slope the last 3 weeks. These 3 here, 1, 2, 3. I mean, it's pushing. It's pushing. It's not enough for a trend, but it's definitely showing more strength, right? I'm going to activate this. So you can kind of see, this is what I need for it to be a 1.5. And I just don't feel like I have a trend. It's just kind of all the same. I need a pullback first. I'm thinking about it, I'm definitely thinking about it. Let's see, and Tony's asking the same question, right? He's like, well, what would it be? I feel like it either has to get to this high or it has to pull back to a higher low where it, right now for me, my thought is it looks like it could very easily just kind of do this. But if it gets there fast enough, like where it goes straight to it, or yeah, that's kind of all it would be. Because as of now, I feel like it's just moving into this red zone coming out of this here. Look, if you put yours at a 1.5, I wouldn't be like, why would you do that? I get it. I'm just saying for me, I'm gonna resist and hold and wait. I defined it. I said that if it gets to that high, but at the same time, if you remember, I said even if it dropped all the way back down to here, I would still keep it at a 1.25. Like 1.25 is what feels right until I see something else. Steven moved his to a 1.5. Okay, fair. Like I said, if you did, I'm not going to be like, I can't see why you would do that. Of course I can. I just have established for me to go to a 1.5, I needed to go straight to the top of this red line. And that's what I'm going to wait for. Could be there next week if we have a good week. Yeah. But if it pulls back from here, then let's just say we have a little pullback, 2 weeks, pulls back, gets here, and then starts to bounce. Then same thing. I need it to get through that line, right? This red line is sort of what's defining it for now. So that's why I feel like it's a good orientation. Okay, let's go down to the short term. Same thing. I feel like actually, I took a point away not long ago. Back around August 31st. Where was that? You know, I feel like I actually could maybe. So we started to see this line, but you'll notice it's a little bit above. Is that enough? No. I'm going to say no. It's not enough. If it had gotten up a little higher than that, then I think I could have. I'm going to keep mine the same. It's just, yeah, it's not a strong trend score, right? If it was back like this for a little bit, we saw this thing was moving a little bit better, but it couldn't sustain that. It eased off of that. That would be more like a 175, maybe even a 2. We're just kind of steady on the short term. Not much movement. Yeah, 125. That feels right. That feels right. Let me change the number of days that we have on the right, and let's go down. But I'll tell you this. If you have a 125 or a 15 for your long term, and then a 125 for the short term, that's a solid score, right? Like it says that the long-term trend supports the short-term trend. It's very nice to see. Whoa, that's a year. I want a month. Oh, and look at this, you guys. Did anyone notice? Let me turn this to red so it stands out more. Whoop. By the skin of its teeth, 0.5. We had above average volume. It was a positive day, and it was a positive day at 0.5%. So that definitely is, oops, I want to move that back. There. Move that one back. Oh, that's fine. That is a buy day. That is a... Oh, come on, Scott. What are you doing? Get it together, man. Bam. Buy day. Buy day. So we have one buy day way back here, which is about to drop off. And remember, our standard operating procedures, we tend to sort of say, we're not going to count this anymore. And you can kind of see that it was almost a reset. This is really what we're looking at. Now from here, we had 2 sell days, then a buy. Tie, 5 ties in a row. But I said I was looking at the... Steven said if he has 3 ties. Now, here's the hard thing, though. Are they ties that are bullish or ties that are... And this is the thing, right? That was a bearish tie. So let's give this a minus. This was a bullish tie. We'll give that a plus. This was a straight up tie. So that's nothing, right? I mean, it was literally like it finished at exactly the same place. This was a little bit of a bearish tie, so we'll give that a minus. And this was a bullish tie. That's a plus. I don't know. Even there, it's like a straight up perfect distribution. Now I'm going to leave it alone. I'm thinking about it, Steven. I like your idea of, can ties, if we have enough of them that are showing the same thing, but actually I'm going to leave it. We still have enough to score here. We still have, what's our final? 2 sell days, 2 buy days, 5 ties. That's basically a tie. A tie goes to the buyers, so I give this a 0.25 score. 0.25 is my score. This has dropped off. Next week, 1, 2, 3, 4, 5. This is what will be over there. That'll be fine when this drops off because that's 2 sells and a buy, and that'll leave us with tie, buy. What this tells me is, without all of a sudden seeing a couple of sell days in a week, my score is likely to stay 0.25 for an extended period of time. This can carry it for 3 weeks at a 0.25 as long as it's not offset. Great. There it is. Okay, so no change there. Up a point there. No change there. What's left? The VIX. The VIX. Let's see what the VIX has to say to us. Okay. So 1, 2, 3, 4, 5. So you remember that the cutoff is here, right? In between. It's a horrible line, Scott. Horrible line. Here. And we had this low. And you can see that what happened from here to here is it caused this to be a turn. We saw it here. And that became a higher low. Higher low, which means we minus 0.25 for that. Right? That's going to drop from my score. But then we went up and we started to turn over. Now, from these 2 days here, I needed to close below the bottom of this day. It didn't. Then the next day it looked great. And then all of a sudden, by the end of the day, it was all the way back up here. And we're like, it didn't. And then the next day we got this, and it still looks like it's turning over. But I need one more confirmation where I close below the previous to fully get there. So I don't see this as a lower high yet. It's not technically met the definition. So I don't get the plus 0.25 for the lower high. I only get this one. That still shows just a little bit of potential escalation. So I'm actually dropping mine to a 1. A 1. I'm a 1 there. Give me your thoughts on this one. This one's subtle. It was a little harder. And it's hard because it's still quite bullish. Still quite a bullish score, but there just has this feel of escalation that hasn't resumed. Now that escalation is happening in the teens. It's happening between 14 and 17. That's a good place for us to, at least it's developing in a low zone. But I'm not convinced that it's done yet. So I'm a 1. Steven agrees. He's a 1. Anyone else want to weigh in? If you stayed a 1.25, I get it. If you're a 1.5, that's a little high for me with what we've seen from the escalation signs, right? Where we're like, the institutions are showing signs of things like that. Where it kind of feels like it hasn't. That's a horrible line again. I don't know what's wrong with my line drawing today. I apologize. That's where I am. Let's see the final. John's a 1. 5.25. Okay. That's fine. That's a good, solid bullish score for a market that is facing tariffs, increasing inflation, decreasing jobs. So we're holding up quite well. It is what it is, right? And with the Fed, let's go talk about the Fed. Remember our saying, don't fight the Fed. The Fed expressing increased dovishness. So if you ever want help reading this chart, a 6. Stephen D is a 6. He's feeling the bullishness. This is the current, remember. If you ever want to just kind of remind yourself that as of right now, 8% of people speculating on interest rate movement think it's going to stay the same, whereas 92 think it's going to drop. Now, we say probabilities, but it's not probability. It's expected probability. It's kind of like almost like an implied volatility, right? There's nothing that can be like, oh yeah, the probability is 90% that they're going to cut it. No, the market has priced in a 90% probability. Is the market wrong? All the time. And there's adjustments that can and will happen. Are we hopeful that the Fed is like, yeah, we'll keep cutting? Sure. I mean, cheap money's better than not. Not for inflation. That does not help inflationary pressures, but it does help the market. So there you go. So the expectation is another cut in October. And then we have one more meeting. You can see here's December the 10th. And so there's really only 1% of the market. I think I would put myself here. Whether we get one in October and not December, or not October but in December, I put myself in the one more this year. Thoughts? I'd love to hear the group weigh in. One more this year. I don't think 2 is in the cards. I know the Fed kind of talked about it, which was interesting that they tipped their hand that way. That's my thought. Okay. Let's go quickly take a peek at the news, and then we'll get to the watch list. So tomorrow, what do we have? Can increase in salaries balance out increase in prices to keep inflation in check? To some extent, yes. To some extent. Okay. Monday, a bunch of Fed speak. Tuesday, Fed speak. Some flash reports nobody cares about. More Fed speak, but primarily this is the guy. So that's the first big one, is what is Jer Bear saying? Wednesday, new home sales, nobody cares. Thursday, our guy Goolsby. Austin Goolsby. What a fantastic name. Just fabulous. Jobless claims back in order, you'll notice. We dropped back to, remember, we're like 265. What? Nah, we don't think that until we have 3 weeks in a row. 1 week, and then the next week we got back down to 231, and now expectations are 230s. That's fine. GDP, this is good news. Expected to stay in the 3s. We also would much prefer GDP ahead of inflation. So if inflation's at 2.8 and we're growing at 3.3, it's not the best, but it is still positive, right? So that would be certainly helpful. Now, if we get a sudden drop in GDP, that could be detrimental. Okay. And then we get to the big news. We don't care. We don't really care. There's some more Fed speaks. More Fed speaking through here. We have an existing home sales report. We don't care. Here's what Steven's talking about, income. Now, the problem is income is expected to drop a tick. Spending stay up a tick. None of that's helpful towards inflation. And then we have PCE. This is the Fed's favored, right? We're expecting a one tick up on the month to month, one tick up on year over year. Down a tick on the core month to month, and flat on the core year over year. Not great, but also not terrible, right? That's not enough. If we see that happen, that's not enough for people to be like, oh my God, inflation is ramping up so bad again. But if we have any negative surprises, if 0.2 becomes 0.5, if 2.6 becomes 3.1, if anything jumps more than expected from the inflationary data, that's going to roil the markets a little bit, in my opinion. We'll see what happens. Okay, let's get to the watch list. Let's build our. I saw some great things on Friday. Don't forget that going forward, I'm going to make the changes today. We're adding 15 minutes to the morning bells with the intention of setups, whether it's intraday, like there may be day trade setups that we're thinking about, because we're going to get through the opening range, or exploring swing setups and fleshing them out into like, hey, what would this look like from a trade perspective? So keep that in mind. Apple, if you took the Apple trade back here, we talked about it. It wasn't an alert, but it's working great if you're in it. I took a little out, a little left to go. ADM, I'm not in this one. I took my loss. But it looks like it's trying to hold this support level still. The problem for me was time. Amazon seems to be on a hiccup. This is one that I actually am thinking about for a possible alert. The trend is still good. It gave this signal here and then it hiccuped. But if the hiccup stabilizes and then turns and it's like, all right, now it's going. Okay. Fair. That's in bounds. APH, overextended. Nothing we can do. That was like where we said this is maybe a flag in a stiff wind. And it's a pretty long flag, but it popped. It definitely popped. AVGO. Yes. I am going to put ADM back on the list. APH is a no for me. Actually, no, I am going to put it on because if it pulls back, that's a maybe. It's a strong stock and one we've profited on recently. AVGO is a definite, like that is setting up. I'm licking my chops for that one. AXP is a bit overextended. A lot of volume. I don't know what's going on with that one. Bank of America also a bit overextended. BTI, just is not really holding up. Citi still have a piece, still looking good. Took some, kept some. Caterpillar on a pullback, that could easily set up. So financials so far just seem a bit overextended. This one as well, but it looks like it's starting to roll over already. CCJ, kind of choppy. I don't see much there. CELH. I don't know. Maybe it's holding up. CLS, overextended. Capital One, Coinbase, Cisco. Still have some Cisco. Trying to see if this thing's going to do its thing. So we'll see what happens there. Delta looks good. Consumer discretionary. Delta looks pretty good. Dash. It moved from here, but it looks a bit overextended now. Dow, nothing there. EA. I would trade EA on a higher low, actually. I would trade EA on a higher low. EXPE on a flag. That looks quite nice. Another one, consumer discretionary. Ford. Ford's looking a little flat. A little flat. Futu. That was actually right there at like knocking on the door. Technically, I would want it to close above 178.08. It was within 9 cents. I would say that's valid, but still looking good for a possible entry on Monday. That's definitely one we'll take a look at. Fiber is a new one for me in communication services, and I think that's looking strong. Now, the problem with fiber is the options are garbage. It has options, but they're garbage options. If you trade fiber, it is a stock trade. If you don't trade stock, you're like, man, this might not be for me. Yeah, fair. Okay. Let's keep going. GE, a little overextended, but looks pretty good. Gold. Google. Come on, Google. I'm putting Google on the list out of hope. If I put it on the list, maybe it'll come to me. Goldman, overextended. We need this to start pulling back. Financials are just sort of on a run. Hood actually was the only thing that gave us a potential, move last week. I think a couple of people are in this one. Howmet. Nah, needs to pull back. IBM. In it. That is not one that we alerted, but one that we were talking about, and it gave a nice little signal through here. I'll put it on the list. I'll put IBM on the list. Intel gapped up on the news. Now it's pulling back. I don't know. I'm not really wanting to trade the chop in the news of that. IWM, like John said, the only major index to pull back on Friday, but overall still looks pretty solid. I'm going to put it on the list because if I trade a small cap, it's going to be options on the IWM. Financials stand to gain a lot by adopting and embracing crypto rails. Yeah, crypto's it's still doing its thing, for sure. Levi took some, took most, kept a little. I'm going to keep it on the list. It made a good move. Some people took all. We'll see what happens with this one. Tight stop going forward. Don't want to give back much. Lumentum. I think Lumentum could provide a trade on a flag type pattern. Las Vegas Sands. So I drew that line because someone stayed in it. I really am a little bit reluctant. I hope it works for that person. I see this, so I really would want it to get through, and then I would trade the next pullback after that. PJ still there? There you go. I'm rooting for it. Rooting for it to move so that I could trade the next pullback and you could get a recovery. How's that? LYV, setting up. Setting up. Much better for options than the previous. Still just kind of okay options. Meta, on a pullback, I would trade Meta. We know that communication services is strong. Morgan, overextended, unfortunately. Microsoft, tried for a little sneaky reversal there. Micron on a pullback. It's got earnings. We'll see how those look. Good to see you, by the way, PJ. I didn't notice that you got in. Netflix, sideways. Northrop Grumman, at this point, it's so long in coming that I don't really feel like that's the trade. I want to see something like this. So the classic pattern that we look for. NVIDIA, no. Actually, NVIDIA, maybe. Do we think that this is the higher low? That's a maybe. My initial response was no, and then I'm like, wait a second. Pagaya. I'm going to say yes to Pagaya. Pagaya on a pullback could be there in no time. Palantir, I think we missed it. Yeah. That just wasn't much of a pullback right there. It looked like we could have gotten this, and that would have been much more conducive to an entry. Roblox. This is a mover. I'm going to put Roblox on the list. This thing can move. Reddit. I'm going to put Reddit on the list because just had a great trade on Reddit that we want to come back. RF, sideways, Rocket Lab, put it on the list. I'm running out of room on my card. Always a good thing. Silver. Silver looks pretty good. It's moving. SoFi, moving. TME, put it on the list. Tesla, overextended. TSM, overextended. Uber made a pop. Made a pop on Friday. Upwork, overextended, needs a pullback. Visa, down, nothing there for us. Walmart, put it on the list. I just barely snuck that last one in my card. Beautiful. How many do I have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18, 19, 20, 21, 22, 23, 24. Beautiful. Beautiful. 20 to 25 is a great opportunity list to go into a week with. Market looks strong. Watch list looks strong. Be careful because there's a lot of thinking going on out there, and we don't want to think. We just want to see thoughts on Oracle. Yeah. Coming back from its earnings, right? Big earnings pop. Ooh, yeah. I think that looks like it could be trying to find. TSM's a good one to be in. I think it's trying to find a support, right? Gapped up, just smashed right through this whole level. Made a new high, pulled back, up, down, hold. Looking for this to turn. I think we could see still something like this, and then it goes. It could be a second day, and then it turns. But yeah, the sellers are not. They're not. Obviously, some profits got taken, but a lot of people are still holding that. Okay. Should we look for growth stocks in the Russell 2000? So it's hard, John. Yes, you're not going to find good optionable stocks in there, right? It can be very difficult to find good optionable stocks in the Russell. And a lot of what we do tends to be option oriented. But I'm open to that. Like if you think, hey, you know what? Let's run a search specifically in the Russell to see what there may be. Let's do that on Tuesday. That's a great thing. If you're coming on Tuesday, remind me, and I'll absolutely do that. Absolutely. But I tend to look for high liquidity sector leaders, and that's just not what you're going to find for Russell stocks. Now, if it's a different mindset of, hey, let's find some small cap growth stocks that could benefit if the Russell continues to move, 100%. You're going to find that there is frustration with the options because you'll be like, they're just not there. There's not as much. So yes, good idea. But it is going to be a slightly different mindset than our traditional, for sure. Risk management. Where are you? There we go. What are we looking for in our risk management plan? Number one, portfolio heat. What's the most amount of risk you want your portfolio at any given time? The heat is a core level that we want to keep an eye on in fluctuation as we evaluate conditions changing. Better conditions, more heat. Conditions start to drop. That's the first place that we kind of scale back. And we're like, I'm going to reduce my heat, which means reduce the number of positions, reduce the amount of risk per position, or you do both. But all three of those potentials will reduce your heat. If you are looking at the record-keeping spreadsheet, portfolio heat connects and correlates well to Kelly criterion, right? That's a risk optimization formula. Trade risk is how much per trade. 1%, 1.5%, 2, 3. Anything above 3 it gets hard. I mean, if you have a smaller account, you might find yourself at 5, but I really, really, really strongly suggest people do not go above 5% risk for any given trade. Psychologically, it's hard for that not to be damaging when things go against you. Number of trades, that's the third of the risk trifecta, right? That's if I have 10 trades at 1.5 risk per trade, that's 15% portfolio heat. So that those three things need to kind of check and balance each other. Some people say, oh, I don't feel comfortable risking having more than 5 trades on. I just don't manage them well. Great. If that's their starting point and they know what their heat is, they know what their risk per trade is. So there's not like one way to kind of put those three together. You just sort of work on that. Risk adjustments, which are going to be adjusted first, second, third, and how are you going to correlate it to market posture? That's D&E. Tsunami indicators, hedging, what causes you in a market like ours to be like, whoa, I need an abrupt shift or at least a temporary where I put a hedge on, tighten some stops, don't take new trades until it plays out. For me, it's the VIX. A high or low, that's my tsunami indicator. But I also keep an eye on sector rotation and I also keep an eye on major market. There have been times where I all of a sudden I saw the Dow surge, Russell, NASDAQ drop. Nothing else really happened, but I'm like, that just doesn't seem right. Okay, put a hedge on, tighten some stops, be a little bit more cautious entering new trades. Makes sense. Lastly, when to take a break. A lot of people don't define this as part of their risk management, right? Whether it's drawdown. If I draw down 10%, I'm going to take a break. Whether it's number of losing trades, don't do 3. I don't know why people are like, if I have 3 trades in a row, three losing trades in a row, that's really not that uncommon statistically. You could have a system that's right 60% of the time and then still see 3 losers in a row on a regular basis. Yeah, it should be more like 6, 7, where you're like, okay, don't just keep spitting at new trades. Let's figure this out. Lastly, and this is the one that is most typical for me over the last decade, when you're out of your trading flow, when you recognize your mindset's off, you're impatient, you're frustrated, something where you're just like, you know what, I've got to just kind of reset and get back on tilt. So define those. It's useful so that you're not like, oh, should I? Yeah. If you've already have it defined, if you see it, you make the adjustment. And there it is, section 4. That's all there is to it. Go download the sample plan to see how we write some of this stuff out, so that you're like, oh, okay, that makes sense. I could do that. And we will go from there. So it's good to see everybody. Tomorrow, 9:15 a.m. 9:15 a.m. Eastern time will be when we're meeting. And then from there, there's my reminder to water my bonsai trees. 9:15 for an hour. Don't forget for an hour. All of our opening bells this week will be for an hour. We're going to give it a shot, see how it does. It's good to see everybody. Thanks for coming and hanging out. Enjoy the rest of your Sunday. I'll see you in the morning. As always, happy trading.